All right, hey guys, it's Axe with another video. The date is still February the 10th, 2023, and it's after the market closed. Wanted to go over, as I'm going through some of my charts, just to give myself, one of the things I like to do is before I walk away from my desk for the day is zoom out, get a lay of the land, go through my models, go through a couple charts real quick just to see, so I'm not wrapped up in the emotions of the day's trading. There wasn't a lot of emotional trading today, but yesterday was emotional in terms of like the deep lead and what it created across the retail sector. And this week has really been tricky and difficult. And last week with the emotional trading with the FOMC and all that. So I like to zoom out, take a deep breath, and say, what do things really look like? Did I lose perspective on anything this week? Are my models still tracking? Has anything changed? Do I need to am I missing something obvious where I need to change my plan? And then that directs my Saturday or my Sunday or Sunday night, Monday, whatever it is. When I next go into the charts, then I know, okay, this is what I need to look at instead of just looking around and meandering and trying to find something. I'm directly going to look for something. So anyway, this is my NYSE master blueprint, right, for the market. And there's a couple, well, there's more than a couple, you know me. There's several things on this chart that I want to talk about. But one of the key elements that I've shared in reference to this chart. And I want to say when I share a chart, and this is complicated, there's a lot going on. We have time cycles, we have fib, we have up down measurements, we have the 30-week, we have a ton of stuff over, from the 70s till now. So 50 years. What I really like you to do is to take this chart, zoom in, look at it, and ask questions. If none of it makes sense, just pick something and say, what does this mean, right? Instead, of just saying, okay, that's a chart, it's too complicated, I don't know what to do with it. When I share a chart like this and I say it's a blueprint, I mean it's a blueprint and you should know it like the back of your hand. At least if you want to follow with, my methodology. If you don't and you do your own thing, I understand that. I'm not saying you have to do what I do. But if you're here trying to learn and you want to know why I say some of the things I do, I think it's important to study the charts and the blueprints so you understand where I'm coming from. And then if you disagree or you see something different, you're armed with that power to say, hey, you're wrong on this, or I disagree. And, if it's a good argument, I'll be happy to discuss. Anyway, I've talked about how the cycle could be speeding up or it could be repeating. Okay, and I want to show you what I mean by that, right? So we have the 70s bear market, and then we have the 2000 to 2000, we'll just call it 2010, right? So we have the 70s and the aughts. And those are basically 30 years apart. Okay, so the start let's just say May 2000, we'll say, somewhere in 68, 70, we'll say 30 years, right? So I've been saying typically we should see the next bear top around 2030. And I said the 2030s and it varies depending on how I measure it, but let's just use 2030. Yeah, 2030 as a guideline. So if all things are being equal, bear, we zoom out, we should have in the 2030s, and that just so happens to be around here, around here, we should see a top. And this top could get really nasty, but we'll talk about in a minute. And then we're going to repeat, we're going to sort of repeat what you see, which is the double bump. I'll just call it the double bump, double bubble, whatever you want. Pretty clear pattern, right? And so if the pattern completes and continues in 2030, we're going to move to the same thing. And that's why we have this so many boxes around this right now. But again, I'll come back to that. If you've seen me talk about Elliott wave, you've seen Alex talk about it. There's this thing called a super cycle, right? There's an impulse, 1, 2, 3, 4, 5, ABC, whatever. Every Elliott wave, I'm still a noob when it comes to Elliott wave, but I know enough to be dangerous. And so when I say a cycle top, we could be in a position to where we had one here and we had one here, and maybe this 2020, this COVID drop was the next one, right? And so that's that top, let's see, 2000 to 20, that's 20 years and not 30, right? So the cycle could be speeding up, and then we're going to see progressively faster and faster cycles, and then eventually we would come down and retest this level, this NYSE 2009 low, okay? And SPX, I'll just go to that real quick. It's probably a messy chart. Yeah, it's not too bad. 700. And you can see, what would it take to get to 700? That's insanity. That's why I say, I don't know. For me, if we're going to go full bear here, yeah, we could retest the 2020 lows. I don't know. We were already there, been there, done that. And so for me, I think we need a bigger bubble to build continuation. And if we're really going to break this bubble, let's come down and let's reset. And I'm just going to go back. let's reset back to before QE started, right? Before the whole mess began, and that's where we're going to reset the whole thing. And so it would take a lot, and that's why I think it's going to take time to get there. We'll be eating crickets by then. We won't own anything, but we'll be loving it, right? You all know the deal. So that's my scenario for like a worst case compression, cycle compression. I think more realistic is that, and I don't know, maybe it's the tarot part of me or like the matrix part of me says, hey, this is already pre-written, predetermined. It's just a computer. You think you're trading against other people. You're just trading against the computer, the simulation. It's basically the same thing here, right? So we had this bear market low in 74.75. We came up above it, and that's sort of what we did here with the 2015, 2016. But you could also say it's sort of what we had here in 77, right? So there's a little bit of gray area wiggle room. You'll have to allow me. So I drew fibs, right? I drew a fib from the top to the bottom, That gave me this, well, we have the 786, the 14, and the 1618, okay? So if you use these as a guide, somewhere around the top, we have this little mini correction. It cuts deeper than the top, and we sort of did that. And then we came up to the 1618, and we tested the 414, okay? And this was above this. So that's why I tend to think that something around here, and again, like I said, the cycles could be compressing where this 2016 and this 2020 was really part of the same bear market. And so it's a concern. But I think something went awry here. Maybe this COVID thing wasn't supposed to happen. Maybe it really was an accident after all. We probably don't believe that. But anyway, we came down, tested the 786. And you could say maybe we did it once here and we did it twice. We did it once, we did it twice. Okay. We tested it and we bounced and we went to the 618. And that's exactly what happened this time in 2022. And I called this out, God, probably, coming out of COVID. And I called out multiple times. People thought I was crazy, and people think I'm crazy to suggest the targets that could come after this. But if you look, we held up at the 1414, which is basically what we did here. And again, depending on how I measure this, we're within range. We undercut it a little bit. And so again, you could say it wasn't supposed to happen. You could say it's different this time, whatever. It's still very similar setup, okay? So come out of the bear, retest it, and retest the retest. Come out of the bear, retest it, retest the retest. Now, if this holds, especially if we can recover, we already have, this 414, and now we're at this top, okay? So I'm gonna come back, and you can sort of see, in this case, we came back, and when I said 6 months of chop in the chat a couple times, it was right above the 30-week, but it was below the highs. 6 months of chop, and then we finally broke out, and that was in 1984 to 85. Okay, we're not quite like that was into this range here, and we still could get there. This is a weekly chart. It's not pretty. We were rejected on the first attempt, but I don't think that really means it's going to crash. You could say we should retest the 30-week. We did sort of a couple times coming out of COVID, and so maybe we could do it again. And that would set up a little bit of a different pattern. But in general, we came down and recovered it, and we're hovering right underneath that level, just like we did in 84 and 85. Okay, and when I look at this model, and I say, okay, does these levels make sense, or am I just fabricating? I mean, to me, it's a pretty clear, whether it's 84, it's 87, it's 81, 82, it's pretty damn clear to me. And that put the top at the 4618 in 2000, okay? So this would suggest that what we saw, the lows that we saw this 2022 bear market is the end of it. The exception would be, like I said, in the 82 model, where we came down and we sort of tested that. We were trapped under the 30-week, and we came down, made one more low. Based on the structure of what we have now, I just don't think that's the case. We are back above, and we would chop here for another couple of weeks and then zoom up new highs real fast. So if we start to zoom up real fast, we know we're looking closer to this. But for me, I'm looking at 6 months of chop, and I think that makes sense. Higher rates for longer. People are, the zero DTE stuff, it's just going to get burned up during that period. And if we're stuck in this range between where, above the 30-week, let me go to SPX, right? And let me just turn drawings off. Right, so if we're above the 30-week, and so we're like 40, let's just say 4,000 to 4,500, and we could chop in that range until summer. And I don't think that would be unreasonable. So let me just turn the drawings off one more time so you can sort of see what I'm talking about. Again, this is that period here. Came up, reclaimed the 30-week, chopped above it for a long period of time, and then off to new highs. Okay. And I'll just go back to the NYSE chart one more time and give you the target if I've got it here. 19.2, well, no, 192K NYSE, which is 1,130% gain. And let's see what that translates to SPX. And again, I know this sounds crazy. I'm okay with that. Remember, we're taking 1,000% here from today's prices. Let's just take it from 40.90. God, it's going to be pretty nasty. Yeah, like I can't even get up that high. I think I might have a red line here. That might have been my target, SPX 22K, something like that. Yeah, something. So that would have been my target, SPX 23K by 2030. Now you can, that's like a 4 or 5x from here. No, 5 or 6x, Jesus. But you get the idea. So I just kind of wanted to show you that, just to give you an idea of what I'm talking about when I say the NYSE model, the blueprint. The last thing I'll say is we had the time cycles, and I built time cycles using those bear markets, and you can see right now we're past like the 3. And if you look here, the same thing, we're right past the 3. So we have time cycles, we have fib cycles, we have, we have everything we need to validate this. We just need these levels to hold, and as long as we're above this 1414, I think we have a strong chance of breaking out much higher very soon. And you can see the ascent here was very quick, very rapid. It led to the 87 crash, but we recovered that pretty quickly, and then got from 90 to 2000. It was really hyperinflationary. So I think we are going to get a bear market, but I don't think we're going to get till 2030. So that's the chart, and I'm sticking to it. Happy to take questions. I hope it helps. Thanks.